What's up, everybody? Michael and Coco here. You're watching the Daily Stock Market Brief. This is the show that we do Monday through Friday, 5 days a week. We use technical analysis and intermarket analysis to get a good idea as to where the market might be headed next. A couple things before we get into today's show. One, there's been... Dang, already with the yawns. I tell you, every time I bring her on camera. The first thing that I want to go over is that there is a spam account that keeps popping up on my channel every time I block it and report it. They keep making these spam accounts. I'll never give you a WhatsApp number or ask for Bitcoin, so please just report those and ignore those. The second thing is I have a sponsored video coming out on Sunday around the Internet of Things sector, so I'm deep diving into that. So if you have any stocks that you want me to take a look at that fall within that sector, please drop a comment of that ticker in the comment section below. Now, on yesterday's market brief, we discussed some interesting things happening with the internals of the market, how we were getting some oversold readings. And today we got that gap down and rip higher. We're going to be getting into some charts here, starting off with some stock market indicators. And the reason why I'm doing this way once again is because we also once again have some very interesting internals taking place while we saw a pretty big rip in the markets. So with that said, let's go ahead and hop in to today's show. What are you looking at? All right, everybody, welcome back. We're going to start off here looking at the VIX. We did have a spike above the falling wedge. It got rejected at a high of 23.55. I want to zoom in on this structure to get a good idea as to why it may have gotten rejected. So to do so, we're going to zoom in on the 15-minute time frame. You can still see that's the structure that you saw here on the daily. We're just zooming in. And notice how when we broke out of it, we saw some just very strong movement to the upside. This puts pressure on the S&P 500. And notice it came into a previous spike right around 23.50. It acted as a level of resistance. Now, we talked about this in yesterday's market brief, that if we get some sort of a gap down, you can see some internal strength step in because we were seeing oversold readings the other day. And that's exactly what happened. We had this gap down and this rip up higher. Now, we came into this 23.50. It acted as resistance, but if you look back to the left, we should have been paying attention to this gap too as well. So I'm going to call out the next one that I see. But the gap was filled and then it got rejected to the downside. It back tested this, came up dead cat right back into this, setting itself up for a Friday to be crushed even further. But that's not necessarily the case. There are some interesting internals that we're going to be going over here very shortly. What I want to call out is pay attention to this 25 level. That gap right there still remains open, which means it's a threat for if this starts breaking up to the upside. We might want to think about considering to take profits on our long positions if it comes up here. Similar to here, this would have been an excellent position to take some profits, or sorry, not take some profits, to go take profits on your short positions, but potentially find opportunities to go long with. And we saw that in today's price action. So the same thing would be on this right here. You would want to take profits or cover short positions, or if you're not short, you can find areas to go potentially long if that holds at resistance. Okay, so that is the gap that we're going to be looking at. 25 was that key level that I showed in previous times, a horizontal line going straight across, and I had little pink circles marking it as support and resistance. So it's a key level to keep an eye on. And these VIX gaps, they typically get filled. However, what gap has not been filled? It's this one for over a year now since the market crash there in March, since the pandemic hit. So volatility levels are still relatively high as the market's pressing to all-time highs. So we still have to be very mindful of the potential of a volatility spike, which can really send the S&P 500 lower. And we'll get into those charts here momentarily, but I wanted to call out that there is still one open gap right above us on the 15-minute time frame, and we're back within this falling wedge with somewhat of a shooting star type candle. So this is setting itself up for a VIX crush, but I'm not fully convinced yet, and you'll find out here soon. Next, I want to talk about the NIMO. This is the breadth indicator. We said yesterday, right here at around minus 50, that was getting to that oversold reading. And guess what? We had that gap down on an oversold reading. We saw the pressure of buyers step up. Buying pressure increased, so we saw the market continue to spike higher. Now we have a negative breadth reading still on a pretty positive day, and we're back above that 3,900. So still, the breadth is not all that great, but it's not overextended to the downside or the upside. Now, what I want to call out that's very interesting is if you look at the market internals, okay, we had a good day in the markets for the most part. I mean, a gap down, right? But we rallied higher. But the BPSPX, these internals went down. We were down 4.2%. So you can see it just drooping right there. This is below the 50 on the RSI. So we had strength, but our breadth is weak, and then our internals here are weak too as well. But that's not just with the SPX. We had the BPNDX head lower. We had also the BPINDU head lower, which were almost back again in that oversold territory. So yes, strong day in the markets that it looks like. We saw some strength come in, but we're not really out of the woods yet. And the internals, there's just a lot of confusion going on. Now, when it comes to trading, I typically am very careful on Fridays. These last 2 trading days for me, I don't know about you specifically, but these last 2 trading days were very difficult. I was getting whipsawed back and forth. I managed to stay green for the most part, but I couldn't get any trend or any momentum on my positions. So there was just a lot of intraday volatility that was very hard to trade. And, right now, this coming into Fridays, I typically lower out my positions even further just because I can have very similar type volatility kind of take place. Now, we'll see what it looks like going into tomorrow when we're there, but I also want to call out that on the CPC, the sell signal, this right here just now crossed back above 8. Now, when we crossed last time above it, we had that little movement to the downside very slightly, but then we recovered very quickly, okay? So right? So we're at some key levels right now. We see some internal weakness on the breadth, and I'll get into sentiment too here momentarily. And then we have the sell signal that was just actually recently triggered. It doesn't mean that the market's going to just turn itself over very quickly, but you got to be just mindful that sometimes when we cross above it, you can see the market roll over, cross above it, roll over. So VIX crush Friday typically happens where the market goes higher, but we have some internals telling us, hey, maybe the VIX goes higher tomorrow. It's very hard to determine right now going into the end of the week. So my suggestion, what I'm doing, well, I'm not suggesting, but what I'm doing is I'm just going very easy tomorrow because I don't want to blow anything up and then, just have a horrible weekend. Now, I also want to call out this. So the NIM, what are asset managers doing? We're right around 80, which is a pretty normal reading. Well, we're a little bit lower now. So there, just consider this like foot off the gas a little bit. Now we're still, relatively just trending it's not oversold, it's not overbought reading by any means. It's just kind of middle of the pack, but as you can see, a little bit less bullish than the previous day. Same with the RightX. The RightX uptick, not by much, still relatively bullish, but you can see that, foot off the gas a little bit there as well. Then when you take a look at sentiment, look at this. This is very interesting from a weekly perspective, I believe it is here. We're at a 2.5 reading on the AAII bulls to bears ratio, and we haven't seen that high of a reading for quite some time, really since 2018. In 2018, we obviously saw that kind of pull to the downside. Now, I wanted to look into this a little bit more, so I brought it up on a monthly time frame. And every time we really hit now the months, by the way, it's not over yet, but when we reach these high readings, I marked it out a couple of times here, just looking back to 2011. You can go back further if you want. When we get these high readings, we still can go up. So it's not like a signal to sell or signal to buy. But what I want to call out here is when we got these readings, the market didn't really go anywhere for months. Like you can see it went up and then right back down and then up and then right back down. And right here and here you can see that for months it was just kind of going sideways. So just it's just interesting. So when sentiment is this bullish, typically you want to take a contrarian type of view and just kind of pump the brakes a little bit. It could go both ways, but just know that's a pretty high reading, overextended to the upside, very bullish reading. So I like to look at it from a contrarian standpoint. And even right here, you can see that we went up for a couple of months higher, but then we really took it on the chin right there in 2011 to early 2000. From early 2011, we went up, and then into late 2011, we rolled over. Then again, we had this big spike, and you can see we went up a little bit higher, and then we rolled itself right back over. So we didn't go anywhere really for 5 months really. So just interesting price action that takes place when this sentiment survey gets pretty overextended to the upside. So I figured I'd call that out for you all. Now, let's look at the indices. The indices are important to look at. We had a breakdown through this head and shoulders neckline, so I want to potentially call this out that this could be the retest. Very similar price action that we had here, and then we break down further. If we break down further, 381 right there would be the target. This gap fill could act as another level of support. So we're seeing a bear flag. We saw that bear flag here. Now, this could get completely destroyed and just continuation to the upside. So we got to be mindful of that as well. We'd have to get back above the 50-period moving average and hold that for probably the day, if not a few 30-minute candles there to give us more confidence that we might see more upwards momentum. You can see here we gapped down, we moved a little bit lower, we tapped right onto the gap, and then we found a level of support, and we really just started rallying throughout the day, pretty much vertical for the most part. Now, from the daily time frame, we still have this bull flag as a possibility. Notice here, we came into the 50-period moving average, instantly held up as support and got right back above on the 20, still within this bull flag pattern. Got to look for a breakout of the bull flag to potentially get more momentum to the upside. And we need a decisive couple closes below 3,900 to see the bears really kind of, gain some momentum to press the market lower. But that just has not happened yet as of right this particular moment. Now, the Qs on the daily time frame, we broke down through this bear flag. We found support back at this support level that we mapped out a few different trading days ago. Actually, it was over here, I think, or this red day, and then we bounced into it and then moved higher. So now we're right at that level again. Do we get a continuation bounce? Hey, I guess we'll see. Like I said, we have some weird internals showing us weakness. We have the sell signal that triggered. Qs, you got to really look at tech, and tech's been getting beaten down while yields go up. So we got to keep an eye on all this stuff, which we'll be getting into here momentarily. The next level of support for the Qs is right around 300. At the end of the episode, by the way, I'm going to be going over kind of a conclusion to kind of bring my thoughts together as I'm kind of running through this. On the 30-minute time frame, this inverse head and shoulders looks pretty much busted for the most part. You had a left shoulder, a head, and a right shoulder. And this lower low right here to this kind of makes it look pretty weak. So this could be a bear flag forming. So we'll see, keep that in mind. If we start breaking down through that, the target would be right around 300, which would also be that gap fill. And that could see the next level of support if we break down from this level. Now, on the DIA, the 30-minute time frame, I don't know why I'm showing you the 30-minute time frame first, but we had this little kind of bear flag formed. Guess what? It broke down through it, then it recovered, and then we gapped down. We touched into the target. So the target was hit, and immediately after the target was hit, vertical move to the upside. Now, I just want to call out, we also could be a very well, somewhat of a bear flag or rising wedge right here. We're back above the 50-period moving average, but we're still well below the 328 level of resistance. So keep an eye on that resistance. If that's broken, it was resistance, resistance, resistance. If it's broken, it could act as a level of support. So be mindful of that, okay? It's not necessarily something you want to short into if we get above it and start seeing more movement to the upside. However, you could potentially put on a short hedge when it goes to 327 to just right below 328 and have a stop loss right above it. Now, what we've seen previously is these little bull traps where it gets above it, breaks, and then breaks back down. So also be very careful, manage your risk during that environment. From a daily perspective, everything looks bullish for the most part, right? The 20 period sloping up, the 50 period, the 200, they're all sloping up in good context, okay? So the bulls have the good context going on right now. It's in the bulls' favor. It's an ideal for them. The bearish type of pattern that I see is this megaphone pattern, which we've been talking about. This would indicate if this is a broadening wedge or broadening ascending wedge pattern, would result in it had to break down through this, and then the target would be this pink box, which would also be a gap fill at 28,500 to 28,750. So that's always a possibility. I don't think it's going to just happen in a day or by any means, but we got to keep that in the back of our mind. If we start breaking down through the 20 and the 50, then we could be a little bit more concerned. But as it stands right now, bulls have the momentum. Now, the IWM saw some strength today. This is a pretty bullish looking type candle here. I think it's called a piercing pattern, where you gap down and then you rally up higher midway through this previous candle. So we had bearish action. We fell over 11%, 10 to 11%, okay? So that is known at Wall Street, right? That's a full correction right there. And now we found a level of support, right? We came in support here, support, and now we found support and some more strength. The only thing that concerns me is the market internals for one. So if this is a fake out, that's pretty crazy to me, because this does show some strength, some good volume. This would suggest a move higher, but we are below the 50 period. We're below the 20 as well. So keep an eye out for a breakdown through 210 and a close down for potentially more pressure to the downside. As it stands right here from a price action perspective and volume, it looks good and looks like we can have some follow through. But as I've already stated, on the IWM, 20% of the holdings in the IWM is financials, and financials do well when the yields rise. And if yields do not rise, and if yields, fall, and especially with a rising dollar, which we'll get into, that's not the greatest recipe for the IWM. So we're going to be paying close attention to all of that. Meanwhile, let's look at the dollar. What is the dollar doing? The dollar now is moving up with some aggressiveness, right? It's actually getting some strength. We closed above the 200 period moving average. Is this just a little move and then it's going to correct? I can't tell you that, but right now it looks like a bull flag breakout, and a target on a bull flag breakout like this would bring us right around 95, and that, to me, would put pressure on the equities market. So we had a big move in the dollar today, and what's interesting is, well, we saw some strength in the indices. So that's also a little weird for me. Typically, we get these inverse correlations. You can see a low, a lower low, a lower low, and then you see a high, a higher high in the S&P 500. So, what's taking place here? The S&P 500 and these other indices sometimes really do, commodities as well, which we'll get into, do very well with the breakdown of the dollar, right? So when we broke down through 92, that's when you really saw the S&P 500 take off. You saw Bitcoin really do well too. So who's wrong here? Is the dollar, is this going to get rejected? Now, the reason why I think the dollar would get rejected is because the dollar is in a bearish trend. It has a bullish breakout on the weekly time frame, and even right here on the this trade specifically, but you have a stronger trend within the S&P 500 and the various indices, and you do not have that trend here in the dollar. So it's just a very, very interesting time right now in the markets, hence a lot of confusion out there. Now with gold, this is also interesting. We were down very slightly on the day with the pretty aggressive moving dollar these last couple of days. So gold's holding up quite well in this environment. So if the dollar does continue to roll over or start to break down, that could really send gold and potentially even silver higher. So we're going to have to monitor that. Silver had a pretty rough day today up until it tagged the 200 period moving average. Now that's the low of 24.43, which by the way was our target. We said this bull bear pennant, if it breaks down, it can easily go tag the 200 period moving average. If it breaks down through that, it can head lower. This is a nice hammer candle suggesting that if we get a follow through, it could bounce right back up. We've seen it before. A hammer candle here, a hammer candle here, a hammer candle there, a hammer candle there, a hammer candle here, hammer candle there. So when we get these pretty solid hammer candles on pullbacks, we've seen some pretty nice moves to the upside. Pay attention to the price percent oscillator. It is bearish and it's below zero, so that's not the greatest sign. However, like I said, it recovered quite well, and looking at the dollar showing some strength, it's interesting to me to see the price action like this in gold and also silver. So yeah, it's just, oh man. I hope you understand my confusion going into tomorrow and why I'm playing it probably pretty easy going into the trading session. Now, when I look at yields were up slightly, the 30 and the 10-year, the curve still at 1.49, so they're holding around these levels. It did peak right here just above 1.7. Is that a temporary peak, or we're going to start taking a breath? It's hard to say. From a TLH perspective, I don't have that chart in front of me right now, but we talked about that bullish divergence and that bounce, and it looks like it's going to be kind of staying around that area for a little bit. So we'll continue to monitor that. If yields fall, that could be good for equities like, for example, the tech sector, and it would be bad for financials. So you can see more pressure to the downside in the IWM. So just to wrap up my thoughts here going into tomorrow, I know I talked about a lot and kind of was all over the place, but understand the market's all over the place, and I'm just kind of mirroring that and sharing my thoughts. So a couple of things to keep an eye out is typically we get VIX crushes on Fridays, okay? So to me, seeing weak internals but a decent day in the markets shows me that the markets will be confused tomorrow. We can see some whiplash, again, back and forth. So be mindful of that when you take specific trades. Now, the price action was strong, but all the internals that I went over today are weak, including the sell signal that was triggered. So perhaps this time around, we do not get a VIX crush. It's hard to say. Perhaps we might get a gap up tomorrow and then a roll over. It's been doing that. It's been doing some weird stuff. We've been getting gap ups and then rollovers, but then we've been getting gap downs and then people buying those dips back up. So just be mindful of that. We haven't had any really good direction as of right now. That's all I got for you on today's market brief, everybody. Have a good night.